with regards to direct and indirect taxes. Pranav Seta, tax partner at Ernst&Young, as well as S. Madhavan of PricewaterhouseCoopers, joins us right now on the show. Thanks so much, gentlemen, for joining in. Pranav, I'll come to you first. And lots that happened. Let's start off with what Ashwin was just speaking about. And something that could probably be a deterrent. I mean, 2G happened, which was probably a bit of a red flag. Then this happens. And of course, now it gives the taxman, possibly gives the taxman the power to dig out a lot of buried cases and probably recover money from them. I don't think, I mean, would it sit well with people?
I mean, I certainly feel this is a retrograde move, to be honest, because amending the law would have been one thing, and I wouldn't have been surprised with an amendment. But amending it with retrospective effect from 1st April 1962, from the time the Income Tax Act has come into force, is a little excessive, I feel. In the sense that while this retrospective amendment might probably give some upside in terms of revenue to the government, the kind of signal that it sends to the community, investor community at large, and particularly the international investor community, is very, very negative. I would feel it would have been a move which could have been avoided. I still feel it's a proposal, but if this proposal goes through and if really it is intended to recover tax in respect of all past transactions, that would be extremely negative. The point that we are trying to make is there was considerable amount of time, energy spent. The whole legal system has considered this issue at great length. After having fully considered the law over 5 years from 2007 to 12, the Supreme Court gives its verdict. The Chief Justice delivers the verdict saying the transaction is not taxable. To now turn around and amend the law retrospectively to bring it to charge to tax shows a certain amount of lack of grace. I think it impacts us as a country in the sense that it will impact the way investors look at India. Because the one thing that India had to offer, which I was very proud of and still am, is that the legal system here is extremely robust. If you look at China, probably they have nothing to talk about. But India has an extremely strong, robust legal system, and we take pride in that. And this probably, I feel, to an extent undermines the legal process.
Madhavan, how would you react to that? Because I think Pranav has laid a very important point. It's almost as if the government has taken its own stance independent of what the Apex Court just announced a little while back, which had a different story to tell, so to speak.
Yeah, I would essentially second what Pranav has said. Very little to add except to say that this was not expected. Surely the retrospective amendment was not expected. So I think its government seems to be a poor loser, and I think the larger interests of the country are not kept in mind. I again agree with Pranav when he says it's still a proposal. I hope it stays as a proposal and doesn't come into the statute.
Okay. Madhavan, before we come into some other key issues as well, just one quick word on the personal taxation front as well. A lot could have been done. I mean, I don't know how much would you have dwelt into it, but hardly any tinkering done with regards to that. Exemption limits barely raised, and a few experts did say that there wasn't too much of a room that the FM had to cut taxes, so a little bit of a tinkering here and there, but nothing major done on that front either.
Yeah, I mean, again, you can argue that he could have done more to sort of try and address some of the challenges that salary taxpayers have. But the loss on the direct tax exchequer of about 4,000 crores, my sense it's largely coming through those reductions at the margin on the personal taxes. So there is a loss that is projected on account of those benefits. It could have been more because there is a 45,000 crores extra taxes on the indirect tax front, resulting in a net 41,000 crores increase in tax revenues. Now, on a broader basis, I would argue actually that's good news because in India, very clearly, the tax GDP ratio of 10.6 is much too low. It needs to clearly go up to 13% as suggested in the economic survey. So from a broader point, tax to GDP ratios clearly must go up. But could they have done more from a personal taxation standpoint? Yes, I would argue that they could have done it. Hasn't happened though.
On the direct taxes, Pranav, you think pretty much deliver or on expected lines?
Yeah, so on the direct tax, personally, the personal tax front, I think the finance minister didn't have much room to help the personal tax front. They could have probably increased the threshold from instead of 2 lakhs to maybe 2.5 lakhs probably. Given that the way the inflation has been moving, increasing it from 180 to 2 lakhs is very, very small. But at the same time, beyond that 2.5 lakhs, I don't think he had much of a room. 2,25,000 or 2.5 lakh, he didn't have much of a room because of the way the state of the fisc is. There's such a huge fiscal deficit, and I don't think he has much room, therefore, to give away any goodies. The tax rates also, beyond a certain level in India, are not unreasonable given the size of the country. So I wouldn't feel that a big expectation was there, at least in my mind, that too much will happen in terms of goodies on the personal tax side. So by and large, it's fine, I would feel.
Okay. The other bit, it sort of looks like a budget that was filled with red flags for a lot of people who wanted to park money into India. And the FM was probably betting on the fact that so much of money is coming, so let's just test waters. This anti-abuse talks that's happened, it just kind of, again, raises into question how confident would some investors be about routing the money through some tax haven countries into India.
Right. So the budget proposes to introduce general anti-abuse provisions, and the way those provisions are sought to be introduced also clearly seems to provide that the treaties that India has signed may be overridden by the general anti-abuse provisions. And if these provisions are passed as proposed, then probably one would really need to think back and reflect whether even the existing treaty benefits that taxpayers have been getting till the current year will be available in the future, or whether one will have to test the relevant treaty jurisdiction entity to see whether there was enough commercial rationale, substance in those entities and so on to be able to continue to avail of the treaty benefits in future. So I would feel that the general anti-abuse provisions, the way they have been proposed to be introduced in this budget, particularly given that even Section 90, which talks of treaties, has been amended, might result in even the treaty benefits that have been hitherto available to Mauritius entities, for example, may have to be retested in the light of the new provisions for future years.
How alarming or concerned are you about it right now at this stage? I mean, because like you said, it's not been put out in black and white.
Right. So the way I look at it is the proposal as it stands could be really damaging for entities which have come through these countries. And if the proposal does go through, then there would be a considerable amount of uncertainty, and each case would have to be looked at on its own facts, whether the treaty benefit would be available or whether any future capital gains might actually not qualify for the exemption under the relevant treaty and might become taxable under the Indian laws. So I would feel that yes, the proposal, if it goes through as is presently in the bill, it could really make the availability of treaty benefit doubtful, depending upon, of course, the facts of each given case.
Right. Madhavan, comment on the fact that there have been a few unclear, ambiguous, so to speak, statements as well. The finance minister has said that they are looking to release a white paper on black money in this session. He has spoken about his commitment on FDI and retail and aviation, but no clear-cut steps being laid out in that direction.
Yeah, I mean, very little to say except to wait for the white paper on the black money. How does he propose to sort of incentivize or sort of ensure and require people to sort of declare incomes and to sort of ensure that those monies come in legitimately into the country? We need to wait and watch. There was an expectation there will be specific proposals to that effect given the huge amount of pre-budget debate, which ranges from the estimates of the amount of unaccounted incomes abroad. So I guess rather than anticipating what the FM has in mind, we'll have to wait for that white paper to see what specific proposal do they have, including possibly amnesties.
Actually, I just want to come back to what we were discussing here with Pranav as well. It's probably not a bad thing to have anti-abuse treaties in place. It's just that if it overrides existing treaties with certain geographies, then that is probably a red flag, because if it comes into being from now with certain companies or certain areas where we do not have existing treaties, it's probably not a bad law to have. What's your sense?
Is this a question addressed to me?
Yes, Madhavan.
Okay. No, I was alluding to the black money question, but again here the viewpoint that I would have is one hopes that the treaty benefits, which are all legitimately available through the double taxation agreements, are retained and the overriding provisions are not implemented. That is what the understood even earlier when such proposals were made, but now it is in the Finance Bill rather. So one would again expect that we are not going down the road where we sort of overlook our treaty obligations and impose punitive measures through domestic taxation provisions.
Anything else, just as a final comment, anything else that you thought was really noteworthy?
Yeah, on the black money, apart from the white paper, there are several provisions in the proposed bill itself, which probably can have far-reaching implications as well. So they are seeking to extend the period of time over which they can reopen past assessments and make unaccounted incomes of past years taxable, and they are wanting to extend it from 6 years to 16 years, which could be a significant change. Not that it's wrong probably to bring to book unaccounted incomes of the past years, but that's one provision which can have very far-reaching implications, especially in respect of overseas assets and incomes. Also, there's a provision which proposes to amend Section 56 of the law, which more or less seems to suggest that if there's an infusion of share capital into a company and the share application is far in excess of the fair value, there could be a deemed income in the hands of the company receiving the share capital. So that's a provision which can have extremely far-reaching implications as well. Also, there are domestic transfer pricing provisions that are sought to be introduced. So right now, transfer pricing provision applies only to an international transaction or a cross-border transaction, where one of the parties at least is a non-resident. Now, even a transaction between two purely domestic entities could also be subject to arm's length price testing from a transfer pricing standpoint. So there are several provisions which have been introduced, which seemingly, apart from GAR, the general anti-avoidance rules, which seem to be wanting to address the whole aspect of black money, unaccounted incomes, stashed cash abroad, and so on and so forth.
Madhavan, before we let you go, just a quick sum up from a taxation point of view of the budget.
Well, I don't think we discussed indirect taxes at all, and I thought there was a lot of stuff in this year's budget on indirect taxes. So maybe I'll take my 2 minutes and talk about those.
Sure, please.
Okay, let me sort of make comments relative to the GST, because pretty much all of the provisions in this year's budget should be contextualized in the larger backdrop of the GST. 2-3 points there. The large downer or the disappointment is we still don't have a date for the GST. In fact, in the earlier two budgets, he said that he was attempting a particular date of introduction. We missed the bus twice over. Now we don't even have a date in mind. And there is a misconception, unfortunately, which is going around that he actually mentioned August 2012 for the introduction of the GST. That is, one would have been delighted if that was the case, but that's not the case at all. We just have the GST network, which is the IT backbone, which is going to be ready by August 2012. But at least that's a step forward. 2-3 other measures which are advancing the GST agenda, so to speak, would be the increase in tax rates on excise and service tax by 2%. Clearly, that's an indicator that we are moving towards a GST rate over time of 16%. That's one piece. The other one is, which to my mind is a huge change in the manner of taxation, is the negative list of service taxation. Not been understood well so far and not discussed, but I can tell you that much more than the 2% increase in the service tax is the significant expansion in the tax base as a result of the change in the mechanism of taxation from a positive list to a negative list. And finally, the last measure which advances the GST agenda is the attempt to have a common tax code across excise and service tax. I can talk much further, but I think these 4 measures in substance clearly advance the GST agenda, at least from a federal standpoint. We of course have the states there, and the FM did mention in his speech that now that the Parliamentary Standing Committee has stopped the discussions on the DTC and finalized its recommendations, and you've all seen it about a week ago, they will now turn their attention to GST, and he hopes to have the report from the PSE soon enough. So I'm still hoping, and I think it's all of India Inc. wishes that the GST happens sooner than later, and we are hoping at least by no later than April of 2013 date we should have the GST in place. That's the expectation.